All right, we're live. Let me toggle screen capture. Screen. There we go. All right, ladies and gentlemen, welcome to the week ahead prep work, the webinar. We do it every weekend on our Discord. As you can see here, we always do the. It's free, and you have multiple traders sharing their ideas and screens at the same time. So some people's expertise is in crypto, and you can see what they're doing. Some people's expertise is in swing trading, scalping, etc. US indices only, gold only. So a bunch of traders trade different stuff. All right, you're more than welcome to join us every week for this. We also do this daily from about 8 a.m. till 4 p.m. daily. We also share our screens and trades as the day goes by. So if you're interested, you're more than welcome to join by clicking at service subscriptions. And for $25, you get an education like nothing else on this planet, because you get to watch multiple traders live sharing their screens and showing what exactly they're doing, how they're entering, and everybody has their own flavor. So you will learn, you will resonate with one or two, or with everybody, and then you'll be able to uh, grow your own toolbox to trade better. I think my algo just took profit on Bitcoin. Hold on, let me see. Bitcoin. Yep, it pumped into my nice. See, sell exit too. Okay. In any case, so I'm gonna show you how we start the week every week. There's only one way to start every week. It's we go to the calendar and we see what's on our fundamental side of things, right? We want to see who is saying what and when, some news, because you don't want to be opening up some trade, and next thing you know, on Thursday you have inflation data hitting at 8:30 a.m. and there's a crazy move happening, and you're like, oh my god, what happened to my trade, right? So you have to know when whatever you're trading. And if you're trading crypto only, for example, you still have to follow U.S. news like inflation, because it will have an impact. Or like when the Fed Reserve Chairman Powell is going to be yapping at 9 a.m. on Tuesday, you bet your ass is going to have an effect on all markets, including crypto. So that's why we want to check the schedule. If you're trading CAD or Aussie, there's specific news there as well, right? GDP with the GDP, et cetera, et cetera. So the big kahuna is going to be the CPI data uh, this Thursday. Basically, we were in the month. If you take a look at the stock indices, we were pretty much in this huge range for the last 2 weeks. We were just up, down, down, up, down. We had a breakout last week on a Friday with the NFPs, and then ISM hitting the numbers, which broke through this range. So if we're going to have a follow through on CPI, that means for the next week or two, we're basically going to be rallying in a bullish mode. That's why it's critical to see what the inflation data is going to come in at. It's going to beat the expectation or not. And let's examine what we had previously. So first of all, you can see that we are expecting a pretty low number. So they know that the inflation is coming down. The question is how fast and how low. So if we're gonna be in line, uh, markets are gonna keep on rallying. If it's gonna be higher, 6.9, for example, then it's gonna be a huge difference, and the markets will sell off. Yeah. So having a very low number like that actually is should warrant caution, because if it was, for example, so if you look at the previous numbers, they were pretty much within a point or 2 point difference, right? So here we had a lower and then higher by 0.1%, lower by 0.2 by 0.2. But the difference between 7.1 last time and 6.5 is a huge percentage difference. So if we're gonna come in at 6.7, or somewhere around 7%, basically, then or 6.8, the markets will tank. U.S. dollar will rally. However, if we come in line or lower, the markets will see it as Fed now completely finishing their tightening cycle and being more aggressive with not being any more aggressive with the interest rates and raising interest rates. Which so this will determine on Thursday what you're gonna trade like for the next 2-3 weeks, pretty much, until you have the next rate decision. All right, and the next rate decision is, let's see. So next rate decision is February 1st. So from Thursday onwards, there's going to be 2 weeks of not it's going to be one way traffic pretty much. Obviously, it never goes in the up or down in a straight line, but it's going to give you clue every time you have a pullback. For example, if the CPI comes in super soft, that means the uh, this breakout is legit, which is not confirmed by other indices. You can see that we're still being capped by the in the NAS and S&P. S&P, we're hitting this ceiling right now. So we're still within a range, and this is what's been happening. So if we finally gonna have a breakout one way or another, the catalyst for that breakout is going to be CPI, and if CPI is going to come in soft, then this thing will rally probably for the next couple of weeks before Fed comes in and before earnings start hitting. Uh, I think in a week or two or three. But the big, like I said, you will have ups and downs, but the general direction will be known after this Thursday, and you should be trading in that direction, even though you might not want to, but that's what's going to happen. Also, you have to figure out that the Christmas rally never happened. Everybody were expecting this to go up after for the Christmas rally, and it actually sold off. So people position themselves short, and last week it squeezes them out. So you have to understand where people who were short and were disappointed, people who shorted and they were short, rightfully so, because there was no Christmas rally. You have to understand where their stop losses are, and the liquidity lies above these points here, pretty much equal highs here, another equal high, and we're three times banging our heads against the same ceiling. With there's a daily order block there and a whole bunch of other resistances. Okay, but ultimately we're just in this range on a daily chart, and we're trying to blast through it. So if we take out this resistance during CPI, we might start recovering higher and higher. So again, let's see how we act around this resistance. CPI will be key, but overall, we also have Powell speaking. He's going to be addressing the jobs number on Tuesday, so he might jawbone and be hawkish again, saying. So the reason why the market might be surprised and Fed will keep on being aggressive with the interest rate raises is because in 1970s the Federal Reserve also had an inflation problem, and then they thought they fixed it, and and they started easing way too soon. Okay, and what happened was then you had a decade of hyperinflation where it was just 20-30% inflation, yearly inflation. Okay, so meaning in 1 year you would lose 20-30% of your purchasing power of in a dollar amount. So if you own $100 a year later, you own $70 in reality. That type of inflation. Okay, so they don't want to repeat the mistake of past, and that's why Fed is still yapping in about the fact that They're going to keep on raising, keep on raising. But that's on Tuesday. Until Tuesday, the big question is, are we going to have a follow through from Friday? And since we have absolutely no news, again, no news Monday, as you can see, there's nothing. Sunday, Monday, there's no news. Highly likely, we're going to be probing and testing those key resistances, and we are exactly at them. And all charts pretty much, it's U.S. dollar versus everything else. They all look the same. So some variant. So on the euro, we're hitting up daily order block here, which is this candle right here. So these are the highs, and we're basically tapping. We're about to approach this key resistance where we can sell from, unless with the stop loss above the highs. So same thing with the pound. We had actually a bullish breakout to the top side. So uh, we're doing a break of structure and changing from making lower lows and lower highs to finally making a higher high once again. There's a lot of resistance right here, a lot of resistance, and the delivery of price to this resistance is not was not it was very inefficient. So um, we might be out of breath uh, to break through this resistance with one more punch. So we might it might sell off first, then consolidate before doing, let's say, CPI on Thursday. Then it can rally given the news on the CPI. But chewing through all this volume here, and we can see the volume by doing VRVPC. This is this pocket right here. I mean, you don't even need to put this on your chart to understand that this was a lot of volume back and forth, up and down, up and down, up and down until it was resolved down, down, down. And this the ISM data came in as a surprise. It was a huge miss, and despite the NFP was not even the highlight. The highlight was the ISM that came in absolutely atrocious, and which gave argument some legs to run that uh, because of the huge miss in ISM, meaning that the economy is going to be doing actually a lot worse than Fed thinks. Fed will have to pause and with the rate hikes a lot sooner than they think, and uh, and that's why on that news and that on that sentiment, all risk assets rallied. Now, again, we're just opening right now, and we're already taking out highs from last week. So uh, it doesn't mean shit because this is still just straight up. It's low volume. Nobody's trading right now. Asian traders are coming in a little later, so this is way early. It can change in a heartbeat in a couple hours, but prices pushing um, resistances, and again, anywhere you look, it's similar structures. You have monthly highs here. This is previous monthly high, weekly high, etc., etc. So if we start closing above it, it's again buy on pullbacks with the risk assets, unfortunately. But uh, I mean, it means we're gonna get more chop, and the same thing with euro after a month long chop fest. We finally have some volume come in. We sell off. All right. We tried to rally, close a little bit of this price inefficiency. Sellers come in, and sold off again, and then with an engulfing candle, so looking very bearish. And then with the ISM coming in super um, heinous, we have a turnaround. So we have this candle engulfed this one, but this engulfed this one as well. So and we're back at square one, right smack in the middle of this whole range, essentially for the wait, right here. See, right in smack in the middle of this whole situation here. Um, Obviously, again, you have very, very strong resistance upstairs. We already kind of were running out of breath here. The momentum is waning, but um, again, with the fundamentals coming in, if CPI if CPI comes in very soft, this thing will fly. So gotta watch out. Let me remove this. That's euro. Let's take a look at indices and then gold and then crypto. Well, let's do US dollar just as a altogether. All right. So this was the rally. This is the daily chart. Let me go to a weekly chart, or let's start with the monthly, so we understand what's been happening. So this is the rally of the last year when Fed started raising interest rates, and the market started pricing in higher interest rates, while the rest of the markets were complacent and weren't doing anything. Now, with the United States, as you can see here, running highest interest rates among all uh, um, uh, G7 countries, and meaning first world countries, first world economies. It's running the highest, but it's they're saying the market participants are anticipating that this is going to take a pause already, and that's why everybody's looking at what CPI is doing. If it's weakening, that means the Federal Reserve is not going to be as aggressive anymore. So this is going to still go up, but not a lot. However, the rest of the economies are lagging, especially something like euro. It's at 2.5%. Meanwhile, and they started tightening way later, and that's why you have a move in the euro looking inverse of that. This was this move because as euro was still yielding nothing, United States was raising. Now that the Europe is starting to raise more, but um, United States is close to stopping raising interest rates. That's why we see some pump in euro. Again, big thing obviously is the economy of Europe, which is absolute dog shit. So I don't know if they can afford to tighten much more, because the situation there is not as good as in the United States. United States is not suffering from gas shortages and overall economic slump. It's doing actually pretty well. Again, it's all relative and compared to Europe. So we'll see. Euro, like I said, there's a monthly order block here. We're chewing through this. Also, the lows, a previous major swing low here area. So we'll see. Maybe this will be enough to produce at least a temporary move down, because the market was ready to move down if it weren't for that Friday news. It was already breaking down. It ran out of steam here. It was doing nothing. Low, strong move to the low, and then they had to reverse. So we'll see how it develops a little later. So with the dollar. So the dollar, as you can see, let's go to the weekly chart. Uh, it's for a decade, well, 5 years, 6 years. Well, yeah, since 1950, since 2015. We were in this huge range. We finally, obviously, broke out as Powell was raising interest rates, and now that there's the inflation sort of have been subsiding and conquered in the eyes of participants, they're anticipating that the dollar is the terminal rate of the meaning the highest yield. We're somewhere close to Fed stopping the tightening cycle. Meanwhile, the other currencies will still keep on going. So that's why we had the rise, and now we're having this fall. However, like I said, Fed is also everybody were anticipating Christmas rally, and they wouldn't get any Christmas rally. We got absolutely slaughtered on Christmas. Not us, but people who were anticipating it for that reason. And I think Powell is going to come in on Tuesday and barred from that CPI coming in super uh, low. I think Fed is still not going to be pivoting due to that scenario in 1970s, because 1970s led to uh, a decade worth of headache because of high inflation later on, stagnation and inflation, um, which is called stagflation. That's when the economy is shit and everything costs a lot. Okay, there's no jobs, and and the inflation eats at the whatever little money you have saved, which most of the world, especially Americans, do not have any much shit saved at all. All right, so we are approaching this key support. This CPI is going to be a catalyst, whether or not we close below it or we start producing a bounce. Like I said, we were trying to bounce last week because at some point this candle was looking very bullish, right? So basically, you have to see that you had this rise, this hammer candle out of this support zone. They tried to sell it off, but the lows held, and at some point, this was a very bullish candle, which obviously had to turn around on Friday. So people were interested in pushing this price up, but alas. But I'm not. You can't really sell it at this point now anymore, meaning U.S. dollar. So it would be very stupid to um, daily euro. It would be very stupid to be buying at this level into this ceiling. Okay, same thing with with the Australian dollar and New Zealand dollar. You basically buying into heavy resistance. So it makes very little sense. So if you want to be along any of this, you got to allow it to break out. If it breaks out, then retest this breakout point. That's where you should be looking for longs if you want to get long the risk. Otherwise, this might not break out and just start rolling over. If it starts rolling over, we sell. If it breaks out, we chill and we wait for a pullback because you're gonna have a breakout due to this price being so inefficient. If they continue in this manner higher, they're definitely running out of steam because after each of these type of um, unsustainable moves, as you can see, back and forth, right? There's always a corrective price action, and this corrective price action is going to be exactly around these levels. So if here there's no point in buying, and I'm short a little bit, but it doesn't look good with me with my euro right now. So I was short since last week. So New Zealand, same shit. So as we are seeing, was trying to chew through some resistance, etc. Uh, let's see, dollar yen. Dollar yen is probably getting decimated. Yep, I didn't buy this, but I thought it's gonna bounce around here, around this level. We still haven't hit any stop loss in this particular trade suggestion, but yeah, it doesn't look good because again we had this long ass channel from all the way from the top, all the way from October, right? This was the 150 some 52 at the top, and this is the first time we had a breakout. We had a breakout to the bullish side, so the dollar was trying to rally again. Come Friday, though, the news put a stop to this rally, and we essentially, as you can see, we grabbed liquidity above these highs, right? So now you have trapped traders here, and that's them being stopped out. This is their stop losses. This is the ultimate stop loss for them. So very likely we can do one of these things if we're gonna have some bullish momentum. Go into this zone here. Oops, close this fair value gap right here, and after that maybe this bullish order block hit up. So, but yeah, what else? Let's see. Uh, Nas. Well, we talked about Nas. So, for example, again with Nas and S&P and all of them, you can't it would be highly idiotic to buy here You're literally buying the ceiling. Even if this price goes up like this, that's just bad trading because you buying here is uh, 75% of the time will never work out. Okay, you will be so wait for the breakout again if you want to be long any of this shit. You wait for a pullback, and if there is some order block, some support, some whatever reason, and then we start rising, that's when you buy it and to drive it up. But do not buy it and blindly selling it after uh, last week is a little iffy. Why is it iffy? Well, because last week told us that they want to take it up. Since we'll have no new news on Monday, there's no reason for why they can't uh, go a little further. I'm not saying it's going to be spikes, but it's going to be one of these price actions before Tuesday, and then Powell might say it's something that will crash the price or rally the price, but it's pretty much probably going to be one of these things. So I wouldn't be buying at this point. As trade as you cannot expect that market will give you A plus setups every day. So sometimes you just have to sit on your hands. And to me, this is one of those scenarios because we're essentially, and I'll explain why. So when this price went here to test these lows, people who were shorting this were absolutely assured that we're gonna take this low out and keep on going. And guess what happened? To their surprise, the price comes back. Okay, so people who longed this thing, to their surprise, the price came back. So everybody's getting frustrated. The longs are thinking, okay, maybe this time it's gonna go. Nope, and it comes back. So same thing, same crowd here. People who are long right now are who have the same mentality as people who are short right here. Okay, they both think that, oh my god, this is it. It's gonna keep on going forever. So these guys who are long here and who want to buy here for more upside are the same idiots who were selling here and got stuffed out. Okay, so that's why you don't buy. You don't buy into the ceiling and you don't sell the floor. Okay, until you have some kind of technical reason to do so. So you would be able to sell this if we would break this down. Then we would have a pullback and roll over. That's the rollover is the shit that you sell, but you don't sell it. You don't sell it right now, right there, at that candle right there, because yeah, again, this Asia might pump a little sucker idiots in and then roll over as well. So for that reason, you have to be patient with all these trades. Let's take a look at gold. Um, so gold is simply moving opposite of dollar at this point, and it's honestly getting a little. It's I thought that we're gonna stop somewhere last week before a lower correction before we have another move, but it's and it started again. Well, it didn't. It only rolled over on Thursday, but we started rolling over because we were overextended, and I was actually short a couple times, but then the ISM numbers killed that. So with gold, again, we're pushing the resistances. Uh, do you want to buy here? No. Can you sell here? It's getting dangerous again because this thing is just keeps on trucking up, up, up. So if you're gonna be a buyer, you gotta wait for a buy at some key support level before more upside. But buying here already is a little too late, and shorting it is a little dangerous still. Even though we are in this weekly, one second, we are sitting. Let me kill this volume thing. Shit on me. So on the oh, so we are in a weekly block here, and yeah, we've tapped it once, sold off, tapped it twice, sold off. Now we're chewing through it. So I also have this monthly candle target magnet. I'll explain what it is. So if you go on a monthly chart, I drew it a month ago, and when we're still here in this candle, and because this was a 7 8 months of pure sell off, I think that we're going to be retesting. This is simply a monthly order block, and I think that the low here, oops, this is where we're pretty much going to be going. And lo and behold, if you drop a line here, it coincides with the 618 of this whole drop. All right, so if you go on daily, uh, this is the line I dropped, and the 618 is right there. So and this is the body of that candle. So somewhere within this zone, I think that's 1900 is. I think that's where, if it keeps on rallying, that's where it's ultimately will run out of steam finally to correct this whole movement up, because this was a move, correction, move, correction, move, correction, move, correction. Then we bottomed out, move. That's not really a correction, maybe a little bit, and another move. So at some point, this is going to be getting some corrective price action, because nothing can just be moving in one direction constantly. So we'll see. That's cold. You guys, anybody? Oh, and 10 year. Mm, the 10 year yield is really the one that did the number as we were watching. So what throws me off with this New Year shit is this New Year gap. But because it's such a weird New Year gap, it happened on New Year, not on any other day. It's weird because most of the time when you have these gaps, they always get here, for example, right? There's a bunch of gaps here. They always get covered. Uh, you if you go back through all the charts, the gaps usually always get. Here's a gap right here. See, it went up for uh, for a few days and then it closed it afterwards. So that's what I was expecting to happen last week, and markets started doing that here. It started to rally a little bit, but alas, didn't last. So we still have this weird gap holding over our heads. Um, it might not close now because it was made on New Year's. It's just very uh, weird, very weird time. So it might not be the gap. It was just the it wasn't just like a Sunday open, like for example here, as you can see, there's the gaps, but those get closed. So I don't know. We'll see. And obviously, if we're going to be keep on crashing in the bonds, it will put more pressure. As what are bonds? Bonds are pricing in Fed stopping the tightening cycle. That's why the yield is dropping, because it's pricing in future yield. Okay, meaning the percent rate that bonds will be paying will be lower as the Fed will be decreasing their funds rate in the future, or at least stopping the aggressive hikes. So as this is dropping now, I think this we obviously have this stupid head and shoulders. The thing is with head and shoulders like this, though, they everybody's, let's call it smart money, smart players. They know that what a head and shoulders pattern is. There's not a single trader probably on the planet that doesn't know what a head and shoulders pattern is. So what happens is they take it maybe 50% or thereabouts, because the way you trade a head and shoulders pattern, you wait for the breakdown. So people they started piling in here, so the price goes a little bit into their favor. Oh, we're good, and then big institutional money turns it around completely. Once in a while, obviously, the head and shoulders pattern plays out, but usually it's about 50%. So even for people who are short here, you should be grabbing profits on that. So if that happens and it starts rallying even to retest this trend line before it more downside, let's say this is going to be CPI price action. This is before CPI. That means that the dollar should strengthen. So we'll see, because we are hitting that 50% mark of this measured move. right? This measured move. So thereabouts 50% is right there. Uh, so that's about it. Anybody wants to do crypto and you guys want to do crypto or indices and stuff like that? We can definitely do that.
Does Trashman, I don't have anything on crypto, so if you want to do that, I've just got my own FX positions. So
yeah, does Lobo, if you're here, do you have anything on crypto at all?
Yeah, I don't think he's here right now. You can just go for it if you want.
Just looking at long term with Ethereum. Ethereum has been trading in a beautiful wedge for the past. Started trading and it's on December 28th. So it's been trading in that wedge for a bit. For any of the long-term traders, swing traders and stuff like that, take a look at it. If it does break down, just wait for it to break down or up. Just wait for confirmation close above the lines to indicate which direction you should be going. You can definitely trade within the wedge here. So from the last bounce to the top where it's at right now, that's still a 7% move. That's pretty good for swings and scalps altogether. Bitcoin W formation formed on the daily, so yeah, could see some upside potential with Bitcoin depending on how much it wants to respect it. It's already broken the neckline there. It does have liquidity to take at 17,806 mark. It does have a 4-hour block or OB on the way up. So any of the scalps can take that or swings can take that. And then I've got a few positions. I have one position open right now in S&P. It's in a tiny bit drawdown, but I'm waiting for it to close above this psych level for me. I have an open position on Euro at 0.6582 for a short. It was very close to entering. It didn't. Yeah, I've just got a couple shorts open. Gold, S&P, Euro. That's all I've been looking at. What have you been looking at, Robbie?
Funnily enough that you mentioned Euro, I got filled on it somehow. I don't know how. I think it'll move back up into that zone though. So I think you'll get filled. I just don't. Mm-hmm. I didn't expect to get filled at this price because it just barely missed. But that could be just chalked up to spread, I guess. But we did make an order block here on Euro on the 1 hour and the 2 hour as well. I guess technically this isn't a break of structure because we'd have to break this, but I'm not expecting these to hold. I think the pullback will break these lows and maybe at the least come up to these highs here at like 29 or something. But aside from that, I have a US CAD entry on a very, very strong 4 hour level here. And that's around, it's like 41. So from there, I'm going to take that to just about these lows here because I'm expecting a little bounce from there or a rejection off of this maybe. So I'm going to take profit with that. I was looking at US 30, like a possible sell up here, but this was Friday and I couldn't hold the trade over the weekend, so I didn't end up selling this. But this was a sniper ass entry and I'd still be holding this right now. Maybe. Yeah, I'd probably still be holding that right now, actually. Regardless of
I took me and Blackson, we took similar one.
Okay.
I took it, but I closed it too. I took I don't know a few 30 points or something, 25 points.
Yeah.
And that's
okay,
it.
Nice.
Yeah.
I'm curious to see what gold will do. It's funny that I drew out this block before futures market opened, and we did exactly what I suspected. We came down here and bounced off of this block. Technically there was no touch on my chart. I still would have gotten filled on that based on the spread from my Euro trade, but yeah, we did exactly as I thought here. And then if we break this high, we'll probably see another higher high. So I don't think I had anything for USD JPY looks weird because we blew through my buy zone. at what is this, like 32.5. And now, if I was in this trade, I'd probably be caught between stop loss and my entry, if not stopped out already. And I don't have anything for a while because we just have a zone here. If we break these lows all the way down to my sell at around 130, where I have, or 131 actually, almost on the dot, where I have an alert set for that. So I don't have anything on that unless we come back up towards 133, and I can sell from there, resell. Aussie, I'm pretty glad I didn't take a sell on that because, as you can see, we just broke that high, and I would have been stopped out pretty quick. But I was tempted to take a sell on this. I just got lucky that I didn't get too impatient. Again, not really. I didn't expect this here, but I guess considering that we were at the highs right before open, you can that should be smart enough, unlike me, to make sure that you don't take this trade because who knows what's going to happen on the market open. And then pound looks like it did the same thing. If it's breaking these highs here, and it's got another little high to break here at 21. But yeah, that's it. I just have two positions open right now, and I think Euro will do well. I've got a wide stop loss on that. It's like 30
Yeah,
pips.
and they're also a little overstretched. So I think even if they run up a little more, higher a little more, they should be running out of steam pretty soon. So maybe not in Asia, but London will probably have some corrective price action hitting it. So we'll see.
Yeah, I think Asia will probably hang out around here, to be honest. And who knows, like you said, maybe London or something. But US CAD's coming up to my entry, though. Let's see if we can break these lows here. 15.
Right. Well, let's see how it. There's still some room to go, so I would wait for London Open, honestly, or at least, well, not London Open, but we are still like in early Asia, very early Asia. So this is still, yeah. This whole day can look completely different just in a few hours. So we'll
Yeah.
see. Blackson, you got some?
Well, personally, I'll just go through indices a little bit because
Yeah,
that's
that's good.
predominantly what I'd be trading. Um, at the moment, I don't have any positions because I don't trade outside of London and New York session because they bring the best and they bring the best volume for the way I trade. But we do have some very important daily ranges for indices itself, as you can see right here. S&P already broke through the last daily high right here, which was a very important level. I was already thinking we're going to sweep liquidity above that and rebalance price right here. But I do think it's still going to cut through that FEG a little bit more, considering we have some important data this week. But I don't think we're gonna see these highs again for the next coming weeks because I'm expecting uh, some down close candles coming into the weekly chart right here. Just because we have these up close candles right here, and once price comes and rebalance right here, because this is the middle point of a fib I drew. If I take a fib from the high to the low right here, you can see the 50% retracement is right around this zone, which it predominantly does on higher time frames. I'm thinking we're going to see a retracement to that middle point, and then start rejecting a little bit more. Of course, if you should take a trade in this zone right here, leave a little bit of breathing room for that, and of course, be very very cautious with the news and everything because CPI is a very important data point which could turn markets around. So personally, I will not be trading during CPI data just because I scalp on a very low time frame. So those price swings can be deathly to me, which is why I don't trade inside of those hours. Here on US 30, we've already kind of rebalanced price, but of course because of S&P and Nas not getting to those levels yet. I'm still expecting some upside movement as well as on US 30. We already broke the highs as well. So that means liquidity has already been taken. So what we're doing right now is just waiting for a rejection, basically, on US 30. I think that rejection could come up to this daily level right here. Nice daily block, which we could see a good rejection off of.
Hmm.
Anytime I would be looking at trades, I will be predominantly looking at shorts just because of the current market perspective. Markets are heavily overbought. You don't need an RSI to see that this right here isn't a premium. You really don't need any of those type of indicators to see that price is coming to a breaking point. In my opinion, of course, with the news, we're going to see some volatility coming in, but I will be waiting to see what exactly the news is going to bring and which direction I'm going to trade in. Of course, I scalp, which is pretty well known, I think. So I will be mostly looking at shorts, mostly because that's the current outlook I have on the market. As I said before, I think that weekly candle is going to expand to the downside. So mostly I'm going to be looking for shorts. If anything changes with CPI data, of course, keep everybody up on that. But that's basically what I have for indices.
All right. Well, yeah. So to wrap it up a little bit, again, as you can see on my screen, if you we do this today, we're doing market prep, so we're doing a lot of analysis. But usually on Monday through Friday, we still do analysis, but we also do a lot of trading and we basically call out all our trades live as they happen and explain them why we think we explain our reasoning behind us entering into trades, exiting, and if you want to learn if you just want to observe how real traders do it professionally, as it happens, and not on YouTube where it's post factum, cherry picked nonsense, right? Where you basically everybody's a goddamn genius because so I did this and I did that in the past. We're looking at the past. This is what I would have done, and blah blah blah. That's all bullshit, right? Or go in the replay mode. So I would have sold this break right here and do this. None of that bullshit. So what we're doing, we're actually trading everything live as it happens. And when you trade live, as when everything unfolds, it's a completely different ball game because it's a lot harder to do than looking at what already happened and ascertain. Oh, this is what I would have done. Like armchair quarterbacking. So, if you want to join us, the link for the Discord is in all the wherever you're watching this, YouTube, trading. You know where to find us, and obviously people who are in Discord, you know what's up. But this is what we do daily, and if you want to understand trading and see how it happens live and not uh, bullshit gurus on YouTube, this is the place to do it. All right. So, on that note, anybody has any questions, comments, and if not, if anybody wants us to take a look at something specific, uh, let me know. Oh, SPY. Somebody was looking at SPY. Yeah, somebody just did. Well, SPY is S&P. So Blackstone just did a S&P. But to reiterate, we're taking out these highs. Since we grabbed the liquidity already, we're looking at the resistances where we can sell it. All right, that's the plan. So my if I were to sell it, I would be selling this fair value gap all the way up here. There's also this order block here, and obviously this huge daily channel that got rejected multiple times. So we sold off. We didn't get the Christmas rally. We sold off. We consolidated. So what I think is happening now. You see this with the basic technical analysis. You have this zone flip, resistance flip into support, and now we're having another flip of the same resistance support that got taken out. Now flipping into resistance. All right. So I think either once I start seeing short term time frame turnaround, I might sell there if I'm trading on a 1 hour time frame. And if not, then obviously the higher I will be waiting for this area right here. Basically closes this inefficiency, and then it's free to move lower once that's done, and that's the S&P. All right. But again, with the CPI data, The easiest thing will be if CPI data provides us with price action that's bullish. Just keep buying dips. Then, in that's my opinion. In the weeks to come, if CPI data actually provides a rollover, that's going to be super bearish, honestly. And I think we'll be retesting these lows in no time. So that's the plan for now. Again, if you have any more questions, let me actually check the pound. So pound and all those dollar pairs look absolutely identical. They're all hitting up key resistances right now. All right. So
Trash man, check out Euro. You should be filled.
yeah, they're all pumping. So this is a 4 hour 4 hour pound. Literally, you see this? We're literally chewing through heavy resistance. If I'm gonna be buying pound, I'm not gonna be buying it here because that's, like I said, you're buying a ceiling. If I'm gonna be buying, I want to see a dip before I buy. But if it's gonna be bullish, I need a close above. I need a close above with a bullish close above, not just a wick and then the body will be here. Okay, so I need a bullish close, follow through, then reversal, and that's a flip, the same one in the S&P. If I see a flip of resistance turn support, hold on, clean this up, something like this. All right, you buy it right there at once it starts rising on a short-term time frame after it basically with the confirmation that this support held. This is a flip, and you put your stop here and doing that. Otherwise, if we don't have a bullish close at the end of today, when we just probe the low, grab liquidity here, and we just grab the liquidity and then turn around, all those noob traders will be caught because they're like, oh my god, bullish, and now they're caught, and the price will start squeezing them and probably retest these lows here with a nice order block sitting right there. That's going to be my trade as well. My algo firing off. Okay. So that's pound. Who else? Any other? Hello, guys. I wish you a successful trading week. Thank you so much. Really appreciate it. Any more questions? If not, let me take a look at.
Hey Stan.
Yeah, what's up?
I missed your Nasdaq breakdown. Are you seeing a
take,
potential, like selling opportunity with the reaching the ceiling, kind of consolidating around the ceiling right now?
1 sec. Nasdaq.
At least on the 4. I'm looking at the 4 hour.
Nas on 4. Okay. So Nas on 4 looks just absolutely disgusting because it's literally, we're like literally hitting up the ceiling, right, of the resistance we've been there before. So, like I've said, people who were people who were selling this, they thought that it's gonna keep on going. They get a surprise, and then people who were buying this get a surprise here. All right.
Yeah.
And then people who were selling again get this surprise. So both buyers and sellers are frustrated because it's chop fest, and that's the whole point of a chop fest. It frustrates the fuck out of everybody because it doesn't follow through. So by the time you get in and you're thinking, "Oh my, I got this," it's going, it goes nowhere, and then if you're swing trading, it basically stops you out at break even. All right, or you take a tiny profit instead of catching one of these moves, right? That's what you want to catch, like this huge move, even or to the top side. Catch maybe from here to here still, but all you get is a little bit of up, down, up, bullshit. So it's frustrating. So like I said, with the pound, this looks exactly like pound. It's just hitting up the ceiling, let's see if we take a breakout and then it's just a wick with the body here. That means we'll grab the liquidity, and the next day we have a price trade lower. That means we're gonna be retesting these lows. So,
Okay.
yeah, but we can edge a little higher. So if I see a spike higher, maybe into this area right here, I would be a seller. I would definitely be a seller because then you have a very inefficient price delivery into the resistance, and you have to be generous with your stops because even if we grab the liquidity above, I wouldn't put my stop immediately here. I would give it some breathing room. All right.
Okay.
Yeah.
Thank you.
Yeah.
You said CPI is tomorrow, right?
Thursday. Powell.
Thursday, okay.
Powell is Tuesday.
Okay.
Mm-hmm.
Cool.
All right, guys. All right. Well, if that's it, thank you all for joining us on Sunday. We will resume our broadcast on 8 o'clock New York time tomorrow. Tomorrow. More, it's free. You can find the links right here. Whoever's watching it on YouTube or whoever's watching it on TradingView, and we will be trading live tomorrow with different traders trading different stuff in different styles. So more than welcome to stop by, learn a thing or two. All right, I'll see you all tomorrow.